Feroze bhai, good morning.
Good morning, Nipun sir.
It's over to DP Singh now.
No, Feroze is very successfully handling a very boutique wealth firm. But I would like him to get more and more customers. Calm down, थोड़ा गरीबों का भी ध्यान रखो. गरीबों अमीर को बहुत अमीर बनाया इसने. The rich people have become super rich with the help of with Feroze, but the middle income now needs his help to go to become rich. I think that is something. My question is where Nandrathi is going to handle this particular niche of the investors. 5 crore to, I mean, he is always interested in the people who are 5 crore plus. So I think 1 crore plus वाला अभी आना पड़ेगा नंदराठी को. So over to you, Feroze.
DP sir, सही कह रहे हैं. I was very excited. Nipun sir भी सही कह रहे हैं कि I was very excited to be quizzed unconventionally by the largest AMC's CEO or deputy CEO, however you may want to call it. And I think DP sir आपने सही कहा. एक खलिश जरूर मन में रही है हमेशा. Right? There has been always a little void in our mind because it's a chicken and egg story. If you are rich, you get good advice. If you have good advice, then you get rich. Right? So what starts first? Has been some dichotomy and an ethical dilemma, in fact, professional, which has been in my mind. And that's where this abhiyan of doing about 1,500, 3,000 shows over the last 10 years, if I can't manage them, let me attempt to educate them. Is why the precise reason, because most of my business, in the sense, if it's 5 to 50 crores, basically reference business, and you don't have to be visible from a media standpoint. That's what is the little contribution we have done. But having said which, trying to get into the segment of 1 to 5 crores or even lower, trying to make sure that it's available for the retail is why our company has two subsidiaries. Which is called the digital wealth management. We have been trying to do trial and error to try and see how do we give ethical advice, which is available to HNI, to an Indian retail or as much as a beginner as well. We will keep pursuing that endeavor, DP Sahab and the industry. We definitely feel that we are not contributing enough to the lower strata. And I think we are duty bound as a company to do so.
Feroze, very simple question. And this is about the entire narrative which now seems to be coming out that the banks are losing their deposits to SIPs. Banks will come back. Maybe they could make fixed deposits attractive. Maybe they could come back with better coupons rate when it comes to debt market. Do you think that there is competition which could come by banks, at least for fixed income products and for the debt market, Feroze?
Nikun sir, yes, competition can come, but going one step behind to your narrative comment, I absolutely believe there is a narrative that deposits are low because equity markets have done well. But if you look at the net sale in equity mutual fund over the last few years, if you look at 3 lakh crores for last year, 1.5, 2 lakh crores for the previous financial year, we are still speaking about 15-20% of the total household savings going into equity mutual funds. Now, if you look at equity mutual funds as 20%, you walk into any bank in India and ask the representative, what is the asset allocation should I do for my savings? Will he say zero in equity? The answer is no. We have 143 lakh crores of deposits in India. It was 44 lakh crores 10 years back, 44 lakh crores to 1,43,143 lakhs, that is 143 trillion rupees. And if 3 lakh is hurting the banking system, it astonishes me that if it was your money, whoever is the representative who's panicking for this money going into equity, would you not put 10, 15, 20% of your money? India has 6.7% of its household savings in equity. And as a country and the banking system, if we are worried that why is 6.7 going into equity, then we don't feel for India. India will not make double-digit return if that's the narrative. And point one. Point two, if you walk into a bank, banks let go of a lot of their floats to insurance companies because the commissions are 30, 40, 50%. That's reality. I'm being very candid about it. I walked into a branch and I'm a premium customer. Every time I walk in for some compulsions, I am sold an insurance. I might not end up buying it, But why are you giving away all your floats to insurance companies? Because they remunerate you 20, 30, 40, 50%, and IRDA has removed the cap of even 50, 100%. The fourth point I would like to make is we need people in the industry with courage. Like DP sir said, DP sir is one of the person who's been a representative of the industry and holds the highest regard in my mind because of his courage to represent the industry correctly. And when you asked him this question, will you get profitable with 250 rupees? What did he say? He said, I will cross-subsidize for the benefit of India and the Indian retail. And I will become profitable in the long run. And anybody who can have a long-run mindset in the asset management company, and it gives me so much sleepful nights when I see the largest AMC representative making statements which are pro-India. We can be nationalists, but you have to be pro-India and Indian retail. The country is made with people and land. And people is as much a part of India.
How do you see the mutual fund industry moving towards simplification, towards products which are low on commissions but easy to understand like an ETF, or complexity is something which would only increase going forward?
Before I answer that, just allow me 30 seconds to highlight that what DP sir said, they both have space. If you look at SBI Bank is the largest distributor of mutual fund, and SBI AMC is the largest AMC in the country. Both are possible. It's not just sweet talk, but this is delivered. So point is, both can coexist, and that's when debt and equity can't fight each other. That's point one. Coming to your pointed question, I think how should the mutual fund industry go is one, and how would it go is a separate story. I personally think the regulator has very clearly separated platforms over the last 5-7 years. AIF is a complex platform with three different A1, 1, 2, and 3, AIF 1, 2, and 3. You have PMSs, non-discretionary, discretionary, and advisory. Then now you are launching another platform which is a little more complex with 10 lakhs. So if the regulators in spirit is telling you, move the complex guys out, and if somebody wants to be rich and still be in the simple product, that's his choice. So mutual funds ideally should go into uncomplicated territory only because there are other platforms for somebody who wants higher risk, higher reward, higher complexity, higher adrenaline. That's point one. Point two, coming to the index fund argument, I personally think index funds will attract more money because cost sensitivity in Indian DNA is there. And as and when there is more popularity for index funds, it will go up. But we as a country have to be prepared for higher volatility if we move towards index funds. Because index funds are created on the basis of valuation agnostic. So if the index has the largest weight of 10% with some company, like in the US, you saw some real sharp falls on our technology companies. That's because they are largest weightage in the indices. So higher volatility comes because indices are created on the basis of growth. Like Nifty 50 will give you more weightage if your valuation is higher, and if you fall, then the weightage comes down. So that's one thing as a country. That's why for the last 5 years, US has thrown up more volatility than India, contrary to the belief.